Hey, it's Jim Csek with Kelowna Now, and I've got Scott Dedels here with the Bitcoin Show. My tongue got stuck there somewhere.
It's a lot to say all at once. So you're not the first time.
There you go. Like the T-shirt, you got to accelerate?
Yes. Accelerate is actually, it's a term. It's a Bitcoin term that sort of speaks to an intellectual movement around let's just rip off the Band-Aid and speed up the process of moving to a better form of money.
Right, and just to say, the Bitcoin rewards, or Block Rewards, sorry, Block Rewards is the sponsor of the show. Where's my tongue today?
I don't know.
Just throw it out there, put it back in. What do we want to talk about today?
We are going to be talking today about the idea of Bitcoin being property, and that it's not just property, it is the best form of property that is available to anybody in the world today.
Cool. So what are you going to show us first?
So what did we first get up here, Jason? Yeah. So maybe just to frame the conversation around the property, the scale of investable property in the world. So this is all the different kinds of property, and we think about real estate as property. So that's one thing, but property is actually sort of anything that you can claim ownership over.
Yeah. And can be digital and or real.
So you can sell it, you can claim ownership, it's property. So real estate, between residential real estate and commercial real estate, is about 300 trillion. These are US dollar numbers globally. Equities, 109 trillion. Debt, big market. Global GDP, 85 trillion. You've got gold, 12 trillion US-ish. And then you got a little bit of slice there at the bottom, which is Bitcoin. And to give everybody a sense of how these things kind of scope out compared to each other. Why this is relevant is there's something in the value of property that's called monetary premium. And monetary premium would be the difference between what these things are actually worth and what is the extra fat that is people looking for a place to store their money. And so monetary premium would be the, kind of a, I don't want to misuse or reuse the word inflation, but when the value of something gets blown up a little bit with a little bit of extra air, because beyond what something's worth, more people have decided to use that thing to protect the value of their cash.
You can kind of use replacement cost as kind of an analogy though, right? Like if you said, like to build a house, replacement cost is this much versus what it's actually selling for.
Yeah. Or you could say it cost me $1 million to buy the house, but the house is selling for $2 million because of
market conditions.
Because of the market conditions. Yeah. Yeah. And so
same as a lot of stocks.
Very much so. Real estate is a great example, and this is why I like this chart, because if you think about 300 trillion of assets in real estate globally, what percentage of that represents a little bit of a lift? That's not people trying to live in real estate or develop it or hold it for future development. They're just trying to protect the cash that they have from inflation.
Right.
And a lot of people do choose to use real estate as a tool to preserve protection, right? Wealth protection.
For sure.
And gold's the same. All these assets are the same. And Bitcoin's property in the same way, because people are using Bitcoin as a tool to protect the cash that they have from inflation.
And we've shared examples before of like if you just buried some cash 20 years ago, that cash would buy a whole lot less today.
Absolutely.
It'd be the same currency, like legal currency that you could use today, but it just would buy a whole lot less.
And less of any of those things that were pictured there.
Absolutely.
Less gold, less houses.
Everything. That's why people buy assets realistically instead of just hoarding cash. Unless you're a currency trader, and then you just flip back and forth between a basket of currencies and hope for the best, right?
Totally. Yeah, so this concept of monetary premium is an interesting idea, because when we look at how small Bitcoin is and we think about its potential to appreciate, part of it has to do with people understanding Bitcoin as being property. If you think about Bitcoin as property, then you can consider it as it compares to other forms of property. So if you're thinking about using a store of value asset to protect your monetary energy against debasement, then Bitcoin is among the things you could choose to do it. And if we're thinking about monetary premium, well, that's kind of the number that is, again, it's the variable amount of how much of this investment capital is just parked somewhere as a defense strategy. So for people who are making the decision around where they're going to park their capital to play defense, that's kind of a different conversation than a land developer needs land eventually because they're going to put a building on it, right?
Right.
And so for the people that are just trying to protect their cash value, they're going to be looking for specific traits in property that are going to be the thing that makes them decide on one defensive strategy over another. So if we're thinking about real estate has been an appealing thing for a long time because it's been a very good performing asset. It's a very simple thing for a lot of people to wrap their minds around why you would own it, right? Because you can maybe generate an income out of it if you have tenants.
Rental.
Yeah. And real estate has tended to be
Capital appreciation.
Yes. And the idea that they're never going to make any more land. But even that is kind of something that's not totally true because, we can build up, we can build lots more up in Kelowna as an example. They can create more real estate here. We're seeing a densification in the downtown area for sure. And any infill lots, they're going to be replaced by multi-unit, like
multi-family.
Yeah. So they kind of can make a little more real estate. So Bitcoin has a bunch of properties which make it unique as property. And maybe the next one you can show, Jason. This is an interesting thing, and it speaks to the misconceptions around the kinds of Bitcoin information that you see in public. So this is a Globe and Mail article from just about 6 weeks ago saying that the idea that Bitcoin is property, kind of air quotes, implying that that's a flaky theory. So there's nothing flaky about the concept that Bitcoin's property. You can own it just like you can own anything else. And proving ownership of Bitcoin is very simple because you can prove that you own the Bitcoin in a Bitcoin wallet by exercising the wallet, by sending Bitcoin out of that wallet. It's obviously yours. So the next slide, this is where it starts to get a little bit weird. How could Bitcoin, something that you can't even touch, possibly be the most valuable property in the world? Not just property, it's the best form of property. This is one way to conceptualize what Bitcoin as property is. And there are 21 million Bitcoin. There will only ever be 21 million Bitcoin. So if you can imagine, this is a block that has 21 million blocks inside it. So that's a 276 by 276 by 276 cube. So inside that cube are 21 million little cubes. And
that's one way to look at it.
That's one way to look at it. And these visuals can be helpful for people wrapping their minds around what this thing might be, because it's confusing for people that it's also money. But if we think about this thing as, if you're buying it as a piece of property, what you're buying is a piece of something that you know exactly how much the piece you bought, how much of the total it is. And that can never change. So it's the most finite thing in the world, and it's the most provably finite thing in the world. But it's also uniform. So if you're thinking about real estate, an apartment building in Regina and an apartment building in Kelowna are not the same. And so there isn't a uniformity in, there's a lot of complicated market factors that would apply to real estate. And it's not just that. You would be thinking about the relative costs in your local market of maintaining and upgrading that property. The taxes are going to be different in every jurisdiction.
Geopolitical issues, all kinds of things, right? So different structures, tax laws, they can change it. Like they can take your Airbnb away here.
Yes.
In BC, they can do different things. The cool thing that I would say about Bitcoin, it is a worldwide concept.
Yes.
That is currently not encumbered by any legislation that is worldwide, right? Mm-hmm. Like it may, in some countries they may have some rules on it, but it doesn't mean it changes in other countries. Yeah.
So if you think about an opportunity to invest in a global property, it would be like if everyone in the world had an opportunity to buy even $50 of beachfront property in Miami, where there was only one grade of it. Each Bitcoin they're fungible. So they're all the same quality. So we're really looking at the whole cube and saying, I can buy any amount of this one thing, and everyone in the world, they're all identical. They're all worth the same, and that's available to everyone. It's and it's also borderless. So if I want to sell it, I can sell it to anyone. I can sell it to anyone in the world. I don't need to know who they are. There's no process of qualifying the buyer. It's not financed. So it's a bearer instrument. It's all held by the owner.
Obviously, like if we look at currencies, a bad manager, prime minister, a bad manager of a country can really hurt the currency. A bad manager can destroy the currency, Venezuela, stuff like that, right? So there is no manager in Bitcoin, is there?
Yeah, and we talked about this, I think, in the last show. Bitcoin, what gives its value, or what lets us determine what this thing, why it's the properties. It's the properties of it that don't change, that allow buyers to agree of its value. And so when you're thinking about real estate or gold, there's a certain amount of it that has to do with, appraising the value of something, right? And with Bitcoin, we're moving into this new state where it's an agreed upon set of properties that never changes. So really that eliminates the need. And what that's doing is it's allowing somebody to find somewhere to put their money, where all this thing is really designed to do is protect the value of money, is to store value. And it can store an unlimited amount of value, because the cube can never have any more units, but the amount of money in the world is expanding all the time. But there can never be any more units of the cube. And everyone has agreed upon this now, like that will never change. So this thing has a very simple job to do. And so this is where, gold, or just as a comparison, because it's easy to make, gold can do other things, which is a positive. It's good that it can be jewelry or industrial metal. But if you're just thinking about the one function, which goes back to that monetary premium, all you're trying to do is find somewhere to keep your money safe. The simplest thing is also sort of a feature instead of a bug. It's like all this thing needs to do is not dilute ever. And it's not going to do that. And so that's what makes it, so then beyond that, you don't need to upkeep your Bitcoin. You don't need to replace the kitchen. If the tax status or the legality of Bitcoin in Canada were to change tomorrow, that Bitcoin could easily flow out of Canada somewhere else, because it's almost impossible to prevent Bitcoin's.
So that's a good question, because is it stored, like when it's stored somewhere, like say if I had lots of Bitcoin and I'm a Canadian resident and I decided that I'm going to live in Greece. I don't need to move it from a Canadian account to it's just it's just on the worldwide kind of web kind of thing, right? So
yeah, Bitcoin was designed to be a native currency of the internet. So what the internet is an information network, global information network, and the advent of the internet really was kind of like the base layer of communicating information on a global scale. But what that thing didn't have was a payments network, because information is infinite. You can copy a picture on your phone or on your computer an infinite number of times, and that's also a feature of that system. So Bitcoin invented scarcity online with this system where there's only 21 million cubes. And by virtue of being able to do that, it solved the problem of debasement of a digital currency. So it's a one-time thing that only works because of all these different agreements around the rules. And this is why it brings to it a potential global market of buyers. There's all that needs to happen for Bitcoin is more people to understand that they can use it for that one thing. And right now, the number of people who understand that is very small.
So I was just thinking this through as you were talking. Like, so if I buy an ETF Bitcoin, that's obviously a security that I'm trading on the U.S. exchange. That's something different, right? Because then I'd have to, if I was to move somewhere else, I'd still have to close out that thing, and I would have a tax liability in the United States for that. Closing that asset out, right? Yeah,
the Bitcoin ETFs are not Bitcoin. They are an IOU that gives you an exposure to the price movements of Bitcoin. And in the U.S. especially...
But they apparently need to buy the Bitcoin though, right?
They do. Yeah. But with a lot of different commodity ETFs, some gold, you can redeem them in kind for actual gold.
Yeah. Take delivery,
Yeah, and so the Bitcoin ETFs were in the U.S. expressly forbidden from that. It's redemption in cash only. So if you had a Bitcoin ETF in the US, a US account, you sold it, you would then need to get the cash out.
And make another transaction kind of thing if you really wanted Bitcoin.
Yeah, it's very different.
Interesting. Well.
Yeah, and so this is sort of the interesting thing that comes out of this is it's a 24/7 global market.
It's
right?
a great currency for a nomad.
Oh, absolutely.
You know, if you're a nomad, you want to be a nomad?
Yeah. Or if you, as an alternative, if you don't want to be an investor and you don't want to leave, and you don't want to keep your money in the currency that you know is becoming less valuable, it's like that's the simplest thing to do. It's not investing. It's just it's just storing your money somewhere that it's not going to hopefully become progressively worth less over time.
There's an economist report out recently saying if we continue on the current path in Canada of this Liberal government, that a currency will probably drop to 50 cents on the US dollar. So the ways to protect yourself from that, there's a few, right? Bitcoin would be obviously one of those. Another one would be buying US stocks, right? Because then you're trading in US currency, right? But getting your money out of Canadian dollars, like if realistically we're looking at another 25% hit on the Canadian dollar, because house values will probably stay the same. They'll just become more expensive for Canadians. Food will become more expensive. Everything will become more expensive. So it's a dangerous path for us to go for our currency. I mean, that's almost hyperinflation here, right? So
yeah, I could bring it for next time. There's a great chart I saw the other day where essentially every currency that's ever reached the level of indebtedness that we have now has had a serious event, not what we're experiencing now, like a serious event.
Yeah, because you and I talked before we went on air, and we've talked about this in the past. I think we've talked on air too, is that the United States is in the enviable position that they can kind of export their inflation because their currency is a world reserve currency. Canadian currency is not that, not even close to that, right? So not a lot of other countries hold Canadian currency, right? So we don't have that ability to export currency. So we definitely need a good manager that manages Canada. And if you listen to Kevin O'Leary, you probably listen to him, he says our manager is currently not one of the best.
Not one of the best, yeah. Yeah, you know, we're not even really free to make our own, interest rate decisions as an example. A lot of people in Canada are screaming for rate cuts here because of what it's done to the cost of mortgages. But the problem, one problem that exists in a really specific example is the Bank of Canada sells bonds, the U.S. Federal Reserve sells bonds, and those bonds have a yield that relates to the interest rate. So if the U.S. rate is higher than ours, then there's a higher yielding bond in a better currency. Like, what's the international market going to do? What's the international market going to be for Bank of Canada bonds? If the US
most people will buy the Canadian ones because they feel like the policies of the Canadian government are way better.
Yeah, sure. Yeah, that's.
Isn't that how it works? You just virtue signaling. You say something like ludicrous, and then people just buy your stuff, right?
Yeah. There was something like, going way back, the market for Canadian bonds used to be really buffered by Canadian pensions, like the Ontario Teachers' Pension, which is one of the biggest.
Buy a lot of them,
yeah, they used to be like 60% allocated to Canadian bonds.
Yeah, they don't though. They buy other foreign bonds now.
Totally. Yeah. So
they don't even invest in Canada, and now there was a big story on that actually.
Yeah.
They it's silly.
I mean, and to your thing about investing in U.S. stocks, I mean, like, you would hope it never comes to this point, but they're raising the fences around capital controls, moves to capital movements, and like in a scenario where something went really sideways, I don't think it's impossible to think that American investment accounts could be liquidated and forced back into Canadian dollars.
Yeah.
This is what happens when someone else is the custodian of your investments, and this is another argument.
Well, even the Canadian government, the recent report from the Bank of Canada is that the Canadian government is buying U.S. bonds.
Yeah.
There was I was watching Bloomberg this morning, and they were talking to a bank, and they were getting letters from their clients saying, like their payments used to be like $900, now they're $1,700. And they're basically almost crying in these letters and say, I can't do it. Like, I can't, we don't have it. Like, we're barely doing this, right? And they don't know what to do. And then Tiff Macklin came out, I think yesterday or today, saying that like we were getting somewhere where we could start lowering interest rates, and then this budget is actually going to make it worse again. And you can go watch that clip yourself, and you can listen to what Tiff Macklin says, and then you can go listen to what Chrystia Freeland says.
Yeah, the problem is that government debt, we're borrowing money from ourselves, and the government is paying interest on that debt that they borrowed. And so the bigger that debt gets, the bigger the interest payments get.
Right.
And this is a death loop where eventually the interest payments on the debt become so large that the only thing countries can do is service them is print more and more money. And that's how you get to
if that actually worked, why would we have a taxation system?
Yeah.
Right? Because there's no need to collect taxes because you just print what you need.
I think of it like if that worked, then you could just buy one jar of Kool-Aid and keep adding water as you drank it.
That's brilliant.
You'd never run out of Kool-Aid.
I'm going to try
that. Yeah. No problem.
It's logic says otherwise.
Yeah.
Policy says otherwise.
Yeah.
Right? So it doesn't make sense. That's why people do put money into assets, right? To protect. And that's what the whole point of this is you're saying.
Yeah. And so you can't buy $50 worth of a house or a desirable piece of property, but you can buy $50 worth of Bitcoin. And this is part of the argument of why it makes sense for people to start trying to slowly save in Bitcoin over time, because you don't need to have a huge amount of money to get involved with Bitcoin. It's really something that's accessible for people anywhere.
And that's like even in the stock market, that's how apps like Robinhood and Wealthsimple and that we can buy. Like if you're buying a share of Tesla, you don't have to buy a whole share. You can buy what you call partial shares.
Yeah.
That's a similar thing.
Same
right?
principle. Yeah.
Because it's a percentage that you're looking for, not necessarily the amount of shares or right, same as Bitcoin, right? You don't necessarily have to buy a whole Bitcoin or 10 Bitcoin.
Yeah.
You're buying an asset at this price and then hoping that it keeps the buying power.
Yeah, that's called unit bias. People will often see the price of Bitcoin and think like, well, I can never buy a whole one, so Bitcoin's already passed me by. But real estate's
same as stock, right?
Yeah.
It's the exact same thing, right?
Yeah.
Apple stock is this much. I can't afford to buy 100 shares, so I won't buy any. But you could buy a sliver or you could buy one.
Yeah.
And if it goes up 50%, your money's up 50%.
Yeah, and this happens routinely with people who start with a small allocation of Bitcoin, and then as Bitcoin grows, now all of a sudden it's half of your portfolio, and then this is what it does by outperforming. And actually, this would be a good one to show the last picture. So, pricing things in Bitcoin is a really interesting way of reframing how this thing is outperforming other forms of property. So this is the cost of a house in Bitcoin. These are US numbers. The Canadian numbers probably even more dramatic because
they would be.
Yeah. So if this pattern continues, then in another 4 years.
So is the one on the far right a calculator error, or is that actually 6.6 Bitcoin? When you do on your calculator, it gets that error message.
Yeah. Actually,
because that looks unreal, right?
Yeah. This is what's happening as one form of property is outpacing other forms of property in terms of its ability to grow and just do the one thing really well. So right now, a Canadian real estate market, I think, is such a good example where it's a mix of the markets perform so well. It's hard to be objective about what a house is worth in Canada. It doesn't matter where you are. I think if you're in Saskatchewan or if you're in Kelowna, there's just this unshakable belief. Even as we know, you hear all these stories like people are at the brink, like they can't.
No, they can't take any more. They can't do it. Yeah.
Right, and so this is part of the problem: is a house meant to be a house, or is it meant to be a place for you to store your money and keep it safe? And if it's going to be both, then we're going to have this problem forever of the affordability of houses. So what Bitcoin actually does, and what that's showing is, it presents a better store of value alternative for investors so that you don't need to buy a second house. You can store your energy in something else, have one house to live in, store your energy in something else. And that should make houses more affordable over time.
Right. Because there is a lot of, I guess we call it investors or speculators that buy a lot of homes.
Monetary premium.
Because they're looking for places to park their cash because they know if they sit on it, it'll be worth a lot less, right?
Mm-hmm. Yeah, and so this is, real estate in Canada can only go one of two ways. It will either go up and up and up, and then in 20 years, no one will be able to afford a house. Or if it doesn't, then all the people who are overexposed to real estate are going to be in a real big bind. And this is partly why I think the government, it kind of is where it is, because any government that presides over some sort of like major housing correction, they will be long gone at the next opportunity, probably.
Is there anything else you want to hit on?
Yeah, that might be it for today.
Okay, that was a lot. That's a lot to think about, though, for sure. And I do understand the need, because one fact is currencies will devalue over time. All currencies will devalue over time, and we can show you charts after charts after charts. Right? There's a good U.S. one out there that shows you the buying power of the U.S. dollar from 1900 to today and what you can buy. Right?
Yeah.
For $1. Because the unit's the same. It's $1 is $1 is $1.
Yeah.
Right?
Yeah. And a dollar in 1960 would got you a lot. Like, this is just different time scales.
You could almost fill up your tank way back in a day, right, with $1, right? Like my dad in early 70s, he only ever used to put $2 in.
Yeah.
Because we didn't have a lot of money, so $2, but $2 would get him through lots of the I think it was like 30 cents a gallon or something like that, right?
Yeah, and so this is the thing about people often harp on Bitcoin's success based on its ability to be a medium of exchange. Like, if I can't spend it, it's not doing what it's meant to do. But it is a really elegant technology and a massive innovation for globalizing the ability to store your wealth in a desirable asset.
Why don't we do that in one of the future shows? How do we spend it? On a Lightning and all these other things? Because I think that would be really interesting to people, because that is one of the things, the drawbacks a lot of people will say right now is it's a great store of value, but I can't really transact in it, right? So, unless I take it out, no different than gold. Like, you can't really go to the store. I mean, a lot of people will probably take it, but it's hard, right, for you to chop it up and, like you say, the Vikings used to do it. But nobody's carrying machetes around where they shouldn't be.
Now, hopefully we don't get there.
Anyway, that's it for today. Again, Scott Dedels, thank you. Block Rewards sponsor the show. And I'm Jim Csek. You've been watching Kelowna Now.